Welcome to Creamer Media's Resources Watch, the weekly video roundup of the events and people making and shaping the news in the mining industry. This week, a third of Pan-African gold from low-cost, low-risk surface tailings. And Sasol proposes new 21 billion rand BBBEE ownership transaction. More than a third of the yearly gold production of Pan-African resources is destined to arise from low-cost, low-risk tailings businesses, which have long lives ahead of them.
Despite a difficult year with a flat gold price, we still managed an attractive cash return to our shareholders in the form of a dividend. The current dividend represents a yield of more than 3.5%. And fortunately, we closed the financial year with a very robust balance sheet in terms of net debt. We have the Barberton tailings retreatment plant, production of circa 20,000 ounces per annum, life of mine remaining 14 years, all-in sustaining cost, again exceptional, $392 an ounce. It really is world-class. Initial capital outlay was paid back in 18 months from when we commissioned the plant. Evander tailings retreatment plant, as we call it, the ETRP, 15,000 ounces or more of gold production per annum, life of mine remaining 15 years, very much is linked to the life of mine of the underground at Evander. All-in sustaining cost, excellent, just over $550 an ounce. And again, initial capital outlay paid back in 3 years. Also, very importantly, the ETRP, as we've said many times in the past, has acted as a very substantial pilot for the Elikhulu project. Now, Elikhulu is our latest and most recent project, currently under construction. In the initial 8 years of operation, we would anticipate the plant would do an average of 56,000 ounces per annum. Total life of mine currently of 14 years with potential to expand or extend the life of mine. All-in sustaining costs forecast at below $550 an ounce, and forecast capital fully funded of just over 1.7 billion rand or $125 million.
Sasol has announced a proposed new 21 billion rand broad-based Black Economic Empowerment ownership transaction, Sasol Kanisa, which will replace Sasol's debt-ridden Sasol Inzalo Fund, which expires in June 2018.
Our new structure is called Kanisa, Sasol Kanisa, and it's similar in that it's intending to transfer a percentage ownership of Sasol to Black South Africans. The difference is two or three things. One is it's set up at an operating company level so that we do have daily and monthly generation of earnings that can be used to service the program. There is no tie to Sasol share price in terms of paying off the debt. And the other thing is we're not going to use external financing. Before we use some external bank financing. We are going to provide financing ourselves. We believe we can do that at a lower rate and then be able to have more confidence that there will be value at the end of the program.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.